What's going on, guys? Welcome to our weekly prep. If you missed it, just go over to the core four. You could go to announcements and just watch the video right here just to get yourself ready for the week mentally. But just going over quickly what we got going on this week. Going to be really not really exciting as last week, but we do got some important economic data. But let's start off. Last week, we did have the Federal Reserve rate decision where they did leave rates unchanged, right? And one of the key takeaways from the rate decision is just that they pretty much gave market expectations of no rate cut in September, right? Because the hints that we got from Jerome Powell, he hasn't committed on September rates. He didn't want an answer. And then he explicitly said, we have made no decision about September, signaling that rate cuts is not on autopilot. So that kind of gave, right, as soon as that headline came out, we just saw pretty much of a hawkish reaction, right? And he also emphasized about caution on tariffs. He said uncertainty around the inflationary effects of ongoing tariffs, noting they already lifted prices by around 0.3 to 0.4%, and caution more time is needed to assess their impacts, right? So it just shows that he wants to also be patient. He's already seeing the inflationary pressures is rising. So this is why this is really what hit the markets hard, right? It gave us that hawkish reaction, showing that tariffs is inflationary. We've been seeing higher inflation on top of that when it comes to the numbers. And like this is obviously before the NFP data, but his tone never changed. So he just didn't give us anything for us to actually believe that we was going to get a rate cut, especially for this month. And this is why we saw a stronger dollar from that meeting, right? The market reactions, why September pause is now favored. Rate cut odds dropped, right? We saw that in the CME report. We saw like literally directly, we saw how markets definitely turned like they turned that possible cut to a pause immediately. Before the meeting, markets priced 65% odd of a rate cut by September, right? By the end of the meeting, the odds fall into 45 to 48%. And I think they're pretty much lower after NFP as well. They pretty much rise a little bit from NFP, but this doesn't, NFP never changed it. Inflation rose, especially the 10-year, right? We saw that the 10 years did come out higher, and equities softened from the rate decision. Equities did push lower from that rate decision. Uh, the two Fed governors, Waller and Baldwin, right, descendants in the favor of an immediate cut. Like that's one of the things where that was the reason why I took a sell on USD JPY was when that came out about Waller and Bowman, right? Coming out saying that they wanted to cut. They asked him the question. Remember when they asked Jerome Powell the question about those two members? And he said it was just them two. But the rest of us, we all agree on a pause. And that was the start of the hawkish reaction right after he said that. So I thought that was pretty important. And also last week, right, we had new tariffs that actually came into the markets. So what's going on here? So we see that the president signed an executive order imposing sweeping tariffs on imports the 66 to 69 countries to set the take, right? The effect on August 7th, tariffs range between 10 to 50%, but most of them was like around 15%, aggressively expanding the US tariffs rate from roughly 2 to 3% for over 18%, right? So we did see that the numbers of tariffs has risen. And economists and investors immediately warn rising inflation risk, supply chains disruption, retaliation by affected countries, and potential drag on economic growth, right? This is all like this is really what the markets is expecting. And the disruption, escalation, and trade tensions created height policy uncertainty and sudden shocks to investors' confidence globally. So when we got remember when in the August 1st, we just saw an immediate drop in the markets, right? So all of that is because this is the expectations of the markets. They feel like tariffs, they're going to cause retaliation. It's going to be inflationary. It's going to cause disruption, right? And now investors is losing confidence with the how the tariffs actually came out. And not just that, we also had weak job numbers, right? Slow labor markets intensifies concern, right? And we see that the July report revealed only 73,000 jobs added, much lower than the expectations. Very low, right? It was a bad print. And it wasn't just that, even the revision numbers, right, was what really kicked it off. The month before, yeah, the revised numbers was just horrible. And that's what spiked most of that recessionary fears, right? So slowing job growth raised fears of aborted economic deceleration, fueled by speculation that the Federal Reserve may cut rates early, right? So that was another reason for what I was saying earlier about, okay, with this recessionary fear coming in place, Trump is just going to blame Powell. He's just going to blame Powell for it, right? But it causes, you see the battle that we're dealing with now. So we need more economic data to give us a decision on what's going to happen when it comes to future rates. Because we had Jerome Powell from the FOMC saying that we ain't thinking about cutting rates. And then right after that, on Friday, we had NFP numbers showing very, very bad job numbers. And that is a signal, right, where we should see the Fed say, okay, well, we don't want to spike in a recession. So maybe we should think about cutting rates. And most likely he wants to focus more on inflation. So if we continue to see rising inflationary numbers, we probably won't see that cut. But if we do see inflation staying where it is or staying a little lower, and if we continue to get bad numbers like that, like bad PMI, bad growth, bad labor data, we're probably going to see the markets actually start shifting their bias and anticipating a cut. All right. So we just need to be more vigilant of economic data because that's going to give us the direction. So, most important, like the main focus of the week, we're going to have the Bank of England's rate decision. So the bank is widely expecting to cut rates by 25 basis points, right? They're sitting at 2.25% in rates. They want to go to 4%. Although inflation remains elevated at a 3.6% in June's reporting, right? Rising unemployment at a 4.7%, slowing wage growth, weak GDP. We've been seeing weaker numbers when it comes to the UK from the UK's data, right? And trade disruptions, right, from U.S. tariffs. Obviously, that's going to impact UK growth and business activity. We also focus on the vote split when it comes to the Bank of England's rate decision. That's what's a little different. That's what separates them the most. It is the vote split, right? So for this one, the markets is more pricing in for another three-way split. So from the meeting, right, the majority, 5 members, are expected to support a 25 basis point cut, and 2 is in favor for a 50, right? So it's more like a 5-2-2, right? And more is concerned about inflation. So if it ends up being like this, there's not going to really be a reaction. If we see ideally the vote split is what leads to better trade ideas, right? So one sec. Yeah, so what we're gonna see, right, is if we want a weaker pound from this rate decision, if we get more members voting for the 50 basis point, right? If we see one more member go there, or even 2 members go there, that's what's going to really weaken the pound currency, all right? Because more members are excessively dovish. If we see even more come to like these 2 members, more comes to a 25, don't really expect much. Then it's going to be more focused on forward guidance. If we see more members come to a pause, right, of a no change, that will probably lead to more strength if more members are concerned about higher inflation. So that's how we're going to have to play it for that rate decision, just so that we could get a better trade idea. Now, moving forward, upcoming events. Monday, Swiss CPI. I know not a lot of you trade it, but this is for the CHF currency. Inflation is usually, sometimes it gives a good opportunity, but it's going to be at 2 a.m. for the CHF currency if you guys want to look at that. Tuesday, that's when we start off with US ISM PMI data. So, as purchases managers index is a key economic indicator that measures the health and performance of the U.S. service sectors, right? The service sectors take up more than 70-80% of the U.S. GDP. This is why these PMI prints are extremely important. All right. So, this definitely helps. This could definitely give us a direction based off of growth, right? If we see a lower print, more likely we could see the odds of a cut coming in. If we see a higher print, right, more odds of a hawkish reaction, right? Because so that would probably be the best opportunities for some type of direction for the dollar and maybe equities. So we're definitely going to focus on that. Tuesday, also at I don't like the timing of this. That's why I don't really focus on it because it's at 6:45. So not a lot of volume, but it's NZD unemployment, which sometimes this could give us a good direction on the NZD pairs. I just don't really like the timing of that event. Wednesday, nothing is going on. Thursday, 7 a.m., we got the Bank of England's rate decision. So I just already went over that. Oh shit, I didn't change this, so exclude that. Thursday, we got unemployment claims for the US. We get this every week. So it represents the number of individuals who file for unemployment benefits for the first time following job separation, typically layoffs, not quits. All right. And then we also have continuous claims as well. So we got both of that at 8:30. We get that every week though. And then we have the unemployment. I believe this is the CAD rate decision. I'm gonna update this for you guys, but this is also the CAD unemployment rate on Friday. We don't really have anything else major. And looking at earnings, right? Got Planter on at the close on Monday. That I know a few of you are holding some Planter trades. And then on Tuesday we do got Pfizer. And Pfizer not really important the way it was in 2020. But let's see. Uber is a good one. You know, Uber could be in Walt Disney. We have and McDonald's. So Wednesday pretty big when it comes to earnings, but I believe it's the S&P, or yeah, the S&P and US 30 mostly for these. At least it's not Nasdaq. We're not dealing with tech stocks really, and I'd say that's really it. You know, I think Wednesday is going to be the big focus when it comes to that. All right, so like just moving forward, right? Oh, lastly, I didn't talk about. Yeah, so when it comes to over the weekend headlines, right? We got Russia and U.S. tensions, and kind of surprised, really, to tell you guys the truth, because when it comes to this, like he deployed a submarine, um, threatening Russia, right, with nuclear submarines if they don't if they don't back off Ukraine, right? Trump says there will be sanctions if Russia don't stop the war, but Russia seems to be good at avoiding sanctions. And then we also have nuclear submarines deployed if they need to be, right? That this is that is pretty crazy. It shows very high tensions that is going on between the U.S. and Russia right now. Usually the problem is like we get a lot of these headlines over the weekend, right? So I would say we're going to continue to focus on this because this could also escalate, right? And we could see how war tensions could definitely give us upside for gold, especially like it's 9 p.m. now. I know most of you guys are watching it, depending on what happens with price action afterwards, right? But if we could see like tensions do escalate, right? If we see that the U.S. or even more concerns with tariffs, right? We get any reason behind it. Looking at gold breaking above 33.64 could give you a really good scalp if we see those tensions happen overnight, right? If anything cause a little bit more escalations, I will look for those type of buys breaking above structure, right? Because US getting involved in some type of war like this definitely would be something that we need to focus on. If we just see that tensions look to de-escalate, even just a price action move, right? Gold breaking below 33.40, like probably over the session, probably throughout Asian session or heading towards London, maybe London, we could get an opportunity breaking below this support of 33.40. It's probably like the two trade ideas I would look for this probably today, you know, depending on which direction that we can get. All right. What I would look out for, right? Because I would like to see this happen overall because we do got tensions coming in. We could still see gold break below this area of support, give us like probably hitting around 32.20, anywhere that we could find a good support forming from. And then once we start breaking back above structure, I would think those would be some good buys, right? Breaking it back above structure and that reaction, or the safer buys above 33.64 could be ideal, right? Because we could break lower and then see gold push up higher with these tensions coming in place, right? Tariff escalations. We got the tensions with Russia, Ukraine coming in place. We got all of this stuff. And I would say that this will probably be something to look out for. Okay. Gold will probably hit this support. If we break below that support, we could also see gold do something like this, right? We could see gold also struggle to break below. Like it will look like it's going to break below, and you're going to take some sells. And what could happen is gold could just like reverse and then just start pushing up afterwards too. So just look out for price action at that support of 33.40. Go to the lower time frames and then wait for a break of structure. All right, guys. I would say that would probably be the best bet. I'll leave the pound alone. Today's this week is the rate decision. So be cautious on the pound. Looking at the dollar, right? DXY. So just remember, if I'm talking about bullish structure on DXY, that means you'll be looking for sells on EU and GU, buys on USD JPY. If I'm looking at bearish structure on dollar, that's buys on GU, EU, right? And that's going to be sells on USD JPY. So it's just so that you guys could understand what's going on. So we still see gold is a dollar. Sorry, we still see dollar is trending within this range, still at a range below 100. Still, I believe if we break below 100, break above 100, I would say that would most likely be the market's price it in a hawkish Fed, and then we could start looking for better buys moving forward. So at the moment, as of right now, with that lower NFP print that we had, I would still be, I'm still 50-50 when it comes to how the markets is going to react. Maybe Tuesday or any sort of news headlines could give us some direction. If we get war tensions with between Russia, dollar might rise as a safe haven. Okay. So something for us to really focus on. But look at this clear area of resistance. So if we start breaking above 99.500, ideally, I think we are going to start hitting that target of 100. That stronger dollar would probably help the idea of weaker gold. We're going to see weaker GU, weaker EU would most likely would be the best ideas. Okay. Sells, if we start clearing below 189,500, I would say then eventually we will probably hit that target of clearing hitting this support around 97 flat. And most likely the sales will come from a dovish reaction overall, right? Based off of rate cuts being priced in, weaker growth data, or even Fed members coming out saying that they support rate cuts because of the NFP print. Because we are going to get some Fed speakers coming out and speaking as well. So we just have to pretty much be prepared for that moving forward. All right, guys. So the Fed speakers might be important this week because that could also dictate the direction that we're going to go. Now, just looking at equities, I'm going to just go over NASDAQ. Pretty much the price action is the same out of all pairs. But we did have a big drop. And most like I'm still ideally thinking liking this drop more from obviously the fears of tariffs is there. That's pretty much the main reason why we got that drop. But nothing, we haven't heard anything yet from other countries, right? From news headlines. So I think they just I feel like this is more profit taking from all the upside we had since April. I feel like this is more profit taking, but ideally, right? You can't fight the trend, but we are at a nice, if we could hit, I would say if we could hit this area of 22,600, even hitting down to 22,400, I would say these would be the two targets to be looking for potential buys back to the upside, as long as we don't get more fears coming into the markets. All right. If we don't get more fears coming into the markets, or China is choking supply of crucial minerals to the Western defensive companies. Yeah, so probably let's see. Uh, so that's what I would look for. But if we get market fear, we get war tensions with Russia, more escalations with Russia. US is getting involved. We see retaliations when it comes to tariffs, right? If we get those two things coming in place, we're going to be looking for sales, and equities is most likely going to continue. We'll probably see equities push higher. form a resistance, and then we will start seeing equities push lower at probably any one of these areas of interest, right? As you could just look at the market structure in a 4 hour. If we push higher and we get any escalations continuing, I think that's what's going to really be the idea to see equities push lower. All right, guys. So I would just focus on that for now. Obviously, over the updates that I'll give you throughout the week, we'll look at different trade ideas. But as of now, like patience is going to be key. Don't try to overtrade. Let's be smart. Let's wait for really good reasons for direction. As of now, I like the tensions when it comes in with Russia, but that was yesterday, right? So I want to, if we see some, even if we see Putin retaliate, like say something, I think that would be something we could really look out for. Okay. But as of now, just be cautious, trade smart. And if you guys have questions, man, don't hesitate to ask. And just be very, just talk to each other. Like what y'all always been doing, obviously, in the Go chat, currency chat, equities chat, just give analysis, trade ideas. When you're doing technicals, right, just put that as a technical idea, right, so that you don't confuse others. But if you have reasons behind your trades, put that too. All right, guys, I'll see you guys in chats.